So you just watched the previous video on how to trade using line charts. Now we're going to look at how you can trade using line charts with price action. Now that means by looking at using candlestick patterns when you're using these line charts. Now we're just going to carry on from the previous video from the same time frame, the 4-hour time frame. And the way we're going to do this, we're going to use a combination, okay, of our structure that we can mark out using the line chart, where our areas of supply and demand are going to sit. And then we'll be looking for a candlestick pattern. We'll be looking for a pin engulfing, a engulfing candlestick, or a pin bar out of those areas of supply and demand. So what we're going to do, we're going to look at an area. Okay, let's just start down here. So we're looking where we see the market shifting, where we can draw out a area here of structure break to the downside. And then we have another small break here to the downside. We then shift back bullish, and we can start to see the market starts to continue to push higher. Now we're showing you more of the internal structure here. Now, of course, if you want to learn more on internal structure and swing structure, all of that you can learn inside the market structure playlist within this channel. So go and watch that after you've watched this playlist. We continue up and we break structure here once again to the upside. Now, as we do this, what we can remember doing is we can look down here for areas of potential demand. Okay, so we can mark these out as demand zones where the market potentially may want to come back to. Now, if we do come back to these areas of demand, we can then start looking for price action signal entry. So let's just look here quickly back to price. As we see price moving away, so we can see a push up, move sideways, and push up. And remember, what did I say? We could also identify, we can identify imbalance zones. Now these imbalance zones are also going to show you normally momentum candles, like you can see here on the chart. Look at the momentum move up, okay? We then pull back, we have another strong bullish candle, we push away, we broke this structure, we've pulled back, and right there we have a pin engulfing. So basically we engulf the previous body of that candle. Now we either want to see a pin engulfing, totally engulfing the previous candle, or the body of the candle. The choice is up to you, but the pin engulfing itself is a lower wick with a engulfing of the previous candle or the previous candle's body. Now when you're looking for potential target, you can look at the line chart again. We have a swing high here, you can look to target, and you then have your next swing high over here. You expect the market to want to run the swing high. So we can see that we move this across. There's your swing high. If we went back to that price, and it's all about using candlesticks, okay, price action trading. If we then used a entry off this candlestick, our stop, okay, we look for the stop either below the candlestick or use the actual demand zone. I normally look to go below the candlestick. And you can look for a first profit target here of a 1-to-1. And then look to target this high here of just over 6-to-1. And that's how you use price action with line charts. There's a first example, okay, a simple example. And all we did, we started with that line chart. Now, if we carried on with this and we just moved with this next movement, so if we just mark off the next break out here, that would give us a new area of demand we could draw. And again, we would do the same thing as the market continues to break up. We continue to look to draw out new areas of demand. And what we've got to do is then go back to the price chart. Again, what do we witness here? We witness, okay, a big momentum push up, pull back, push up, we pull back, and we create a pin bar. Now this pin bar is not the best looking pin bar, because when we're looking at pin bars, we want to see it closing within the previous candle. That is one crucial criteria. If you're using candlesticks for entries, is a pin bar must always close within the previous candle's body. This didn't, it would not be a candlestick I'd trade. I don't have any other candlestick patterns here I could trade either to the upside. I would not have taken any trades here. Going back to the line chart, we then have this break of structure to the upside, which would create a new area of demand here. Now that does mean we can see that we didn't have an entry here. We had a break structure to downside, back to price, and we just run straight through. What does that now give us? Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. That gives us a new area of supply that I can draw. So now we can go back to price. Price comes back into the supply zone. This would be the low here we look for price to go back to based on our line chart. So price comes into this area of supply. Now on this time frame, we just have this big bearish candle to the downside showing the imbalance, and it's an engulfing candle. Okay, we engulf the previous high to low of this previous candle. So there's no entry. Perhaps on a small time frame there may be an entry and it runs straight for this low. Now if we go back to the line chart, you will see that understanding this was the area of supply, it was a good zone to look for a trade. Now we never closed this low, so a potential sweep you could find here on this time frame. What we do see is that big bullish response as the market goes higher. We then would look for price to run this level, removing this area of supply, and creates this area of demand. Now an area of demand here, let's go back to price to see where our last area is. So just look to see which is the lower of the two. This will be my area of demand. So once we broke out of price, we can look for an entry. Okay, so as we broke out here, we can look for a price action signal. What do we also have within this area of demand? A sweep to the downside. We learned that in the previous video. Let's see if we have a candlestick pattern. So unfortunately, we have here, this is our bullish candle, broke out. We then had the pullback, okay, the sweep of this low and a push away. Now the only candlestick here I can see is this candlestick here for a bullish move. And I look for the market here to run this high next. Now we can see that actually that does happen, but as the line chart was showing us at the time, we can see we actually run to that high, go back to the line chart, we actually had to sweep, okay, after that. So if we then go back to price, we don't have a sweep on the actual price, but the line chart we did. That means I could actually look for a confluence here to take a buy on the inside bullish candle instead and run price to the upside. That is one more price action candlestick I would look to use, the inside candle. Now this is going with a continuation entry, and we can look to enter off the inside candle, stop below the low of this candle. First target would be this high, just under 2 to 1, and they'll be looking for the next target for the next high, which will be here. And you can see the market pushes all the way up, okay, to just under a 4 to 1 risk to reward. So that's how we're looking at using those candlesticks. A very, very simple technique when looking for those candles. Then we just wipe everything quickly off this chart. Let's now go to a 15-minute time frame. And let's go to the line chart, and we'll just find any piece of price. Okay, let's find a bit of price. We have a bit here. Let's look at the market here. So we can see that we had a break here to the upside. We then reverse structure here to downside. And then we continue to break here to downside. So this area here, we would have an area of supply. We could start looking for potential signals. Let's go to price. So we have this area of supply. Market drops out, pulls back. We don't really have a decent entry. This does engulf the previous candle. We didn't quite wick higher. I prefer to see a wick above this high for an entry there. Let's go back to the line chart. We follow the procedure. We have another breakout. We have another breakout here. And again, we could go back to price and we could mark these out as areas of supply. There's an area of supply, price held, area of supply. Price has not come back to that zone. So we continue to see the price rolling off to the downside. We have another area here. Now that gets reversed right here. So now we can see where the market is actually reversing structure based on a line chart. And then eventually we break out there. So you can see we actually went higher, pulled back. Did we break out that low? We did just break out here. Then we broke back to the upside. And this was a very complex area of price. Then we broke out here. Before we broke out there, we created this sweep right there. So now if we just go back to the price here, you'll be able to see that we create this area of supply. Price came into, we had a higher low, and then we pushed out with this move here. That created this area here of, in fact, it's going to be from this low and this bearish candle. Price pushes up. Okay, we had another breakout, a new area of supply, but we had this demand, but we had this area already on the chart. Very complex area of price. We broke down lower. That's going to create this area of supply. We pushed back through. Okay, now all what's happening here, this sideways price action movement, it's not something we want to be trading in. We're just coming back into this area here of imbalance. So we just pushed back into imbalance, and then we created the 2 candle reversal with a bearish engulfing candle right there. Okay, or even that candle there is a bearish engulfing, but we have a long lower wick, which I do not like. But this would have been a potential area. Why was this a good trade? Can you remember what we just went through on the line chart? Now, perhaps write down, leave me a comment if you remember what just happened. I'm not going to go back over, but there was something here that I said that could be on the price chart for an entry. And it was an entry. And we got a nice first profit target, and then we could let the trade run. It's all about bringing everything together that you're going to understand going through all the material in this channel. Of course, if you want to learn just how to use supply and demand, then there is the Profit Per Trade workshop. Currently, it's on sale with 50% off. Now, there's a link in the description of the video, and there's a link above now if you want to go and check that out. This is how we look at using price action with line charts. And you can see that this trade actually ran all the way down here. Now, where would we look for a target? We look back in price, and this would be a great target of this low. So we can mark this off, because I believe this low would have already been run, so we wouldn't use that. So you would use that as your last final target. And look at that, we've got just over 7-to-1 risk to reward. And that's all understanding what happened right at this area of imbalance. If you don't remember and you haven't dropped that comment below, make sure you do. And if you can't remember what happened, go back, watch the video again at that area so you can understand what happened there. Now you have a good understanding how to use price action with line charts. Head over to the next video next, goes through more line chart trading concepts. And don't forget, if you want to join that free Telegram community, there'll be a link popping up next as well.